Well, normally we walk and talk, but right now I'm just going to kind of sit and let you see the view. Across the water is Canada. I'm here in the US, but that's Canada across the street. That is the St. Clair River. But I wanted to talk about a topic that you hear a lot about, and I don't know if I know it well enough. So let's kind of learn this together. Stagflation. And honestly, I didn't even hear that word most of my adult life. And I've got some notes with me so I can keep track. I can give you facts. I've done my homework. I've done some research. But stagflation, that's not a name I've really heard. You've heard of inflation and deflation, but not stagflation. Did they just make this up? So here's the deal. The Federal Reserve's latest decision really has people kind of whispering, are we heading there again? Are we in inflation? Are we going to have out of control inflation? I'm not a financial expert. This isn't CNBC. I'm just somebody who wants to understand what's going on, and I'm trying to figure it out. And who knows, maybe you are too. But let's kind of sit and enjoy the weather, the sunshine in Michigan, which doesn't happen that often, and kind of learn this together. Here's the question: what is stagflation? Let's break this down. Stagflation and inflation. Imagine you're driving up a hill, but your gas pedal doesn't work, and your tires are melting. That's stagflation. The economy's not moving, or it's barely creeping. But prices are still going up. Normal inflation happens when people are spending kind of like crazy. You know, they hyper spend, they just reckless with their spending. But stagflation, the economy is not hot. It's lukewarm, or it's kind of cold, where I think it could be today. But prices are still rising. Okay, and here's something, a little history lesson. And I mentioned this happened big time in the 70s. People lost their jobs, groceries got expensive, and the usual tools to fix this problem, like lowering interest rates, made the problem worse. It made it bigger. You know, imagine yourself trying to cool down in a room by opening the fridge, but the heat is still on. That's kind of what policymakers were dealing with back then. Okay, what did the Fed just say? So this past week, June 18th, the Federal Reserve dropped its latest economic updates, which means no rate cut. They decided keeping the interest rates where they are, between 4.25% and 4.5%. Why? Because they see inflation is still too high. They think it might go back up again. And they're afraid it's going to go up before it goes down. Now, also, think unemployment is going to rise. Their concern was unemployment was teetering, much more so than they previously thought. Now, here's where it gets interesting. The Fed released something called the dot plot, where members share and think rates, where the rates are going to go this year. Most of them think that they're not going to cut rates at all this year. They still think, but there are still people out there that think that we're going to cut once or twice. I don't know if that's true. I think all the predictability is unpredictable right now. I don't think we can predict what's going on, what's happening. You know, overall, the bottom line is everybody's less confident than they were just a few months ago. And they're saying we might cut rates. There's a squirrel running up to me. I'm hoping he's not going to jump over here. But we might not cut rates. Let's kind of see what happens. I mean, it's a little bit, everything is unclear, unknown. And yes, there's bickering, there's fighting going on from a political standpoint, not like it was during the elections period, but people are angry, people are mad. The economy's not where it should be. There's a lot of things going on. But let's break down the numbers, okay? Let's look at these numbers for kind of normal people. And I've got my notes here. Inflation, okay? They think it's at 3% which is up from 2.7%. Unemployment currently 4.2%, but they expect it to go to 4.5% and maybe stay there for 2 years. They don't expect it to go down. Unemployment rate's going to go higher. And we've talked about in another video, true unemployment. What is true unemployment? True unemployment, maybe a quarter of the able-bodied working people in the United States are unemployed. They don't count those. All they count are people that are receiving benefits when it comes to unemployment. I'll cover that in a whole nother topic. We'll dig in deeper. I've looked at unemployment. Being somebody in the recruiting industry, I've dug into this a little bit. But interest rates. So no cuts, maybe a smaller cut at best. The Fed chairman indicated like no cuts, didn't hint to a cut. So the best we can hope for is maybe one cut and maybe a smaller cut later this year. So what's the whole deal with stagflation? What does it matter? What's the situation there? What does that mean for all of us? It really means that inflation eats away at your money. And higher unemployment means there's more layoffs, there's fewer jobs. You know, companies are paying attention. Companies are not moving quickly. If the rates stay high, that means expensive credit card debts, mortgages, car loans. Yeah, and that's not exactly a soft landing. That's not the soft landing that we're all hoping for. Okay, now with all of that, does this officially count as stagflation? I don't think it officially does, not yet at least. But the reason that people are bringing it up, because it kind of feels like we're flirting with it. We're getting close to it. We're teetering on it. The economy is cooling. It's not heating up. It's stubborn. The inflation is pretty stubborn. It's not giving up one way or another. If anything, it's kind of heading in the wrong direction. And the Fed's kind of stuck in let's wait to see what happens mode. Instead of driving it, they're kind of waiting to play it out and see what happens. So I've got a quote here. One economist said that the Fed is seeing more stagflation now more than it did back in March. That doesn't mean alarm bells are ringing, but the symptoms are showing up and they're being watched closely. Usually if you're sick and you have certain symptoms, they treat you. They don't wait to see what happens. This is vital information. This is vital to the economy, to the world economy. I mean, they're already pushing, and that's a whole different topic, but they're already pushing to move the dollar as not the going currency for the world. And that could really be devastating for the United States. I mean, we've got a lot of debt, and if we can't, what they do is they print more money so they stay out of trouble. This could mean a lot of trouble. Okay, let me give you a couple real world examples here. Let me give you an example. I was talking the other day to somebody and they said, my paycheck isn't going anywhere. My paycheck isn't going up. Everything's expensive. And I think that's the vibe. Nobody's making more money overall. People are struggling for income and everything is going up. The price of everything, it's just disgusting when you walk into the grocery store and you see how expensive everything is. Groceries, gas, rent, utilities. Everything's creeping up, but your income's not. And that's troublesome. Some are stuck in jobs that they hate, but they can't leave. There's job cuts going on. There's hiring freezes going on. There's layoffs going on. I've got a whole nother video I'm putting together on the layoffs, and they keep coming, and by thousands. And I think there's a boat out there making noise. As you can see, that ship. It's awesome here. Really, this is awesome. You get to see a lot of things. And I may have to go undercover here because now the sun's coming out. The sun hasn't been out all day. But the bottom line is the job market isn't growing. It's slowing. It's slow. It's paused. People are pausing buying homes. I've got another video coming out on the real estate market and how that has really flipped, especially in the past week. People are pausing buying homes. They're holding off on new hires. They're wondering how do they scale down. And unfortunately, this stuff trickles down to all of us. Like this pause, this hesitation, this concern, this really has a negative effect on everything else. All right, let's talk about why the Fed is stuck. Like the Fed's kind of stuck in a position right now. If they cut rates now, the economy will get a short-term boost. Like it'll take off, but inflation could shoot back. If they don't cut rates, it keeps inflation down, maybe, but it also makes loans harder to get, makes business more expensive, makes cost of living more expensive for all of us. They're trying to hit this perfect balance, but it's kind of like threading a needle. Like it's kind of like threading a needle during an earthquake and while a tsunami is hitting. You just can't figure it out. They can't figure it out. The problem is everybody's just watching. They're waiting for indicators that will say, yeah, we're doing better, or no, we're not, or at least we have direction. Right now, from an economic standpoint, we don't have direction. Yes, Trump has tariffs. He's trying to reset the import economy, really. And we can talk about that in a whole nother subject. The problem is we want to get rid of the dependence on every other country. We want to try producing things. We want to make the field fair, and that's painful to do. So here's where I land, and maybe you do too. I don't have all the answers. I don't know how this plays out. I don't know, and I'm really trying to understand how this stuff fits together. But I think learning it together makes us smarter. Whether you're running a business, whether you're changing jobs, this has an impact. This has an impact on everything that we do. So let's keep talking about it. Let's keep learning about it. And please, in the comments, you probably know more than I do about this. Drop a note. What do you think? Stagflation, where are we? I'm not an economist. This isn't CNBC. I'm trying to learn it along with you. And I think it's a new term, but correct me in the comments. I could be wrong. So let's learn this together. Let's work together. And I really appreciate your time and enjoy the scenery. Let's see if we can get a little bit more scenery here. But enjoy the scenery. I'll show you some scenery as we close. Thanks for watching.